Good day, everyone. I hope you're all doing well. Today, I want to talk about something that I think is really important, and it all ties into the emotional reactions we have to price action. And it's built around this concept of the fact that price never looks bullish at support or bearish at resistance. And that's why it can be so hard to find longs at support and shorts at resistance. And I'm going to give some examples here. But what I want to do is I want to start on near because I took some longs on the way down here, and I took a long down here on near last night. And it was based off of a retracement into this 886, into this descending channel with a stop under this low. But I took longs on the way down as well. So I took a long into this golden pocket retracement. The idea was to sweep this low. And we got a nice little bounce here. I actually did hit a TP1 on that, and I got stopped back at entry. And then below this, we had this level, which what it was a swing failure back test of this wick. So if you're not familiar with this setup, I'll just go over it very quickly. It's very common price action for price to come down and sweep a low, grab that liquidity, rally, and then retest that level for a bounce. And so that was the idea that I was happy to, why I'm opening longs here again. And so what I want to point out is a couple things. One, I don't know that price will bounce here. I see a reaction. There is no way to know if price will rally from here or break down this level. It's irrelevant to me. I'm just longing with invalidation, okay? There was actually plenty of time to take profit off of this position too because you got a 2% bounce. And what I recommend, or rather what I prefer, is I like to take quick TP1s. If I get a nice long off of a key level and price rallies 2%, I like to take profit at local resistance and then set a stop to entry, and I can always come back and re-enter that position if I get the opportunity. And that way I'm locking in a winning trade. I'm kind of trying to take partial profits. Maybe it's anywhere from 30 to 50% to cover my trade. So I'm basically free rolling that position. I can always compound it later. But that's not the point of this video. The point is, as price came in and made this low into this descending channel in the 886, this is very common where, when a big key pivot comes in, I'm not saying this is one, but if it is, I'm going to give some examples of in the past. I'm also going to talk about some of these positions I still have running with shorts on Doge from the highs here, shorts on DOT from the highs, and it's going to be built around this concept, and I'll try to do it all quickly. But the idea here is when price starts coming down, all anyone is thinking or talking about, in whether it's in the Discord or on Twitter, even just the general sentiment around alts is alts look so weak, alts are nuking, the market's nuking, everything looks so bearish, longs, bulls getting wrecked, all that stuff. But what I'm thinking is I'm going to be looking for longs here because the way the market moves, if we zoom out on near, tell me one of these lows that looked bullish. Price is always quote unquote nuking and looks super bearish, and that's grabbing liquidity in a way that you would never want to long if you just are looking at price as price going down quickly equals bearish. Price going up quickly equals bullish. And what you need to balance isn't that you're just shorting every candle that goes up quickly or you're longing every candle that goes down quickly. You need to have key technical ideas. But what I would say is, let's say if you have this descending channel and this idea of an 886 with invalidation under here on near, you have to be willing to trade it with it's important to have risk management, to be trading it with good sizing, to be okay getting stopped out if the level doesn't hold. But you have to be willing to trade this technical idea even if price is coming down quickly into that level, because it often will be. And it's the same thing on Bitcoin. If we go, I can look at this on the 1 hour chart. If you've followed me for a while or you've been a member of the Discord, you'll know, I really like the way that I draw parallel channels, but you'll know that I was trading this parallel channel, for example, taking this long here very aggressively right at the lows at the first sign of a reaction, because guess what? It's a very nice idea. I have very close invalidation. I had a thesis already when price was up here of coming down into the lows, and so I can long that. And the same thing, I mean, there was like 10 technical ideas here that I was shorting, but this is the just a very simple one, but there was a ton of ideas here. I was looking for this 25.2K level, and even as price was rallying up here, it's not that I was shorting every rally, because I wasn't. I was waiting for that key level, but when price wicked up into this level here, I aggressively was shorting here with close invalidation, and then we get the reversal. So I'm still waiting for key levels, but I'm not going to get shaken out of the idea of shorting because, whoa, look how bullish this is. Look how, on a lower time frame, it would have even looked more bullish. I'm waiting for the key levels. I understand that it is very likely that price will move up very quickly and aggressively into those key levels before retracing or dumping. And the same thing goes with looking for longs. For example, I think we got about a 20% move off of this. This was one of my key targets for my shorts, and I took this long. Yeah, we got a 22% move. I took this long incredibly aggressively because I was waiting for this low to be taken. I was waiting for the not the quote unquote, the 886 to be tapped. That had been my back here long thesis or short thesis at 25.2K into the 886. I had Elliott wave and harmonic ideas for that, and I was willing to take this long aggressively. And guess what? I think that price looked bullish here? No, but I don't care because price never looks bullish when it comes to support. That's why it's at support. It's dumping into support. But I have my key technical ideas with nice invalidation. So as soon as we reclaim this level, I have a 1% stop loss to trade back up into the highs. Obviously, we got another retracement here. I got nice profits off this position. But the point is, when I'm taking that long, I have the idea from way back here. I have the levels on my chart. I don't care that price is moving quickly into the level. I don't care how quote-unquote bullish or bearish it looks, because I'm experienced enough to know that, like this swing failure short on Doge, that the fact that price is moving up quickly or moving down quickly shouldn't shake you out of a position, because it typically is. You're very rarely going to find instances like here, FTM, I longed down here on FTM. We got this quick move into the 786. Now, we initially got bounces off of like the 618. We got this bounce. I like trading these levels, but if these levels break down, obviously you should be taking profits off of a position from here. If these levels break down, you have something like the 786, which alts love. I talk about it a lot. And just because price is moving down quickly into this level, it looks super bearish. I'm happy to long a reaction off of that, because I know that price usually is moving very quickly. And in hindsight, it always looks so simple. You could say, well, maybe I would long a swing failure off of this low. You have really nice invalidation. You sweep the low, you reclaim it, and you put your stop under there, even if you're just targeting up into the highs of the range, whatever your thesis is for the long. But in hindsight, this looks like such an easy long to take, but people can never find it because it always looks too bearish when price is coming into these key ideas. And so, last night I longed FTM down into this golden pocket, and the idea was sweeping this low into this key retracement. Now this level might hold. Maybe we get something like we did before, where we get a rally up into the highs of the range, and then we come back down to the 786, wipe out the liquidity under here again, in which case I would just long the 786. Maybe this golden pocket holds and we have a huge rally. Either way, I'm looking for these key ideas, happy to trade them even into quote-unquote super bearish price action, but just taking profits reasonably off the positions. And it's reasons like this where I'm willing to short key high time frame ideas. I'm willing to long key high time frame ideas, and it's reasons like for this reason I have these types of positions. Whether it be like the shorts on Link or DOT. These are just some examples. I have shorts on Gala as well. You'll see a trend for the types of levels that price likes to move between. And yeah, I just think, there's some important concepts to unpack here, which is just I'm not longing here because I know that price will bounce. I just use invalidation and risk management. I like the type of technical ideas I trade, whether it's swing failure, back test. I like, I have a style that allows me to take these positions to find these lows and highs relatively frequently with good risk management, but they're not easy positions to take typically because, you will often, I'll often have longs, swing longs from the lows and swing shorts from the highs because I'm willing to trade these really aggressive, quick moves into key technical ideas. And one of the reasons that I'm able to do that is, I can find these liquidity ideas, and my TP1 is usually a scalp take profit, which means I'm just looking for that quick, 1.5%, 2% move, 3% move into resistance, and I'm going to take some profits off my position, stop loss to entry, and again, I'm just longing key levels where I'm likely to get a bounce. I'm not getting too bullish when there's a little bit of a bounce. I'm willing to just take profits, stop to entry, and again, just keep trading these key levels. And when you recognize that price likes to move between key levels with little bounces, resistance, retracement, resistance, retracement, you can take these low time frame entry ideas at high time frame support. So this is what I would consider lower time frame analysis. You're trading off of local fibs on this 1 hour chart, but with the broader context that, near is at the absolute lows of this range. So, there is a lot of upside if this range holds to be looking for longs down here at support, which I'm happy to do. Hopefully this is helpful. I always use Bitcoin as confluence. Bitcoin's been holding up a little bit better than some of the alts. I've been longing the range lows here and looking for longs on retracements. This point of control is one of our most important levels of support in this range. It's around the middle of the range. Sorry, this chart's a little messy, but you can see here, Bitcoin ultimately came down and we have a range here on the 1 hour chart, swept this low, another swing failure, came back, swept these highs back into the kind of the middle of the range here. And now we're coming back and testing the point of control. We have bullish absorption in CVD. Is there anything particularly bearish about a liquidity grab to grab stops? I wouldn't say so because price is doing that constantly, right? And in this broader range, that's sort of been the for the last month, what price has been doing to the upside and downside, forming a range, getting everyone bullish at the highs, breakout longers get trapped, shorts get stopped out, then we do the same thing, sweep all the lows, do the same thing back and forth, and that's even happening on a lower time frame. So if you're looking for scalp entries or nice entries at the lows, you need to be willing to long moves like this, right? You need to be willing to long swing failures like this, which I did. My long came in around here, but I'm willing to long the lows of the range. I don't care how quote unquote bearish it looks. If I see a reaction, I'm just using risk management. And what you'll find is you'll oftentimes, even if price does break down eventually in this range, if you're willing to long the lows of the range, you'll find that you'll oftentimes have 5, 6, 7 winning trades before the range eventually breaks down and stops you out, and you lose one trade out of this range longing if it eventually breaks down. So that's how I like to approach the charts. I never put too much stock into how price action looks. Like price is going down quickly, therefore it's bearish. Price is going up quickly, therefore it's bullish. But just the important thing is that you are trading key technical ideas, that you're not just longing every green candle, or in my case white, or shorting every red candle. That you're not shorting every green candle or longing every red candle. You still need key technical ideas, right? For example, this is a golden pocket retracement. I wouldn't just be longing every move down here on near. I'd still be waiting for the key level to be tapped. But when price comes down to the key level, happy to look for those longs at the key levels, regardless of how bearish price looks. Anyways, hopefully this was helpful. There's the emotional toll of price action moving very quickly, maybe, it can be really hard to counter trade moves like this if you are looking at it just emotionally, right? But if you're just saying, I am going to long the touch of this descending channel on this 886 with a stop under here, no matter what price action looks like. For me, I like to see some kind of reaction. So if I'm seeing these reactions here, I'm just happy to take the long with my stop under the lows. So anyways, that's what I did. We got a nice rally. Price is coming back and retesting some of these levels of previous support. So you can see support, 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 reclaiming these levels. It'll either hold or it won't, but my longs are from the lows down here. So same with FTM, same thing. We got a nice reaction off of this level. Maybe we'll come back down and retest some of this support, key fib retracements, into the 618. That'd be an interesting level to look for longs if you didn't have one. I think it's always wise to take profit off of positions. We have these support resistance flips that are prices oftentimes moving between, flipping support into resistance, support into resistance, support, lose it, resistance. And those are usually good times to look for either scalp shorts or take profits on longs, and looking for that structure and price action to be forming support into resistance, support into resistance. You even have just local ideas here with local swing failures. You have liquidity under these lows. You can see this little spike in volume coming in as these lows are taken. So people are getting stopped out, people are shorting, and then the reversal starts happening. And the same thing that happens on high time frame charts is happening on these low time frame 5-minute charts, where you have these liquidity grabs of the highs. People want to long that breakout, and people shorts are getting stopped out, and then you have the reversal back into this local range low, and maybe you start seeing some more of this ranging, come down here, wick out all these shorts, something like that, or sorry, all these stop losses. So anyways, hopefully this video was helpful, not too rambly. Yeah, I just thought this was an important topic to cover. So anyways, hope you all have a great day.